Let's stick with AI. Apple's AI initiatives could very likely bear fruit, but that success has already been accounted for in the stock's current price. At least that's the argument being made by analysts at MoffettNathanson, who initiated coverage on the stock with a neutral rating. Joining us now is the analyst behind that call. We've got Clay Griffin. He's the analyst with MoffettNathanson. Clay, it's great to have you here. So talk to me about why you think all this excitement for AI, or I should say Apple's push into AI, why that's already been reflected. Clearly, we've seen a nice run up in the stock, but why you don't see further gains?
Well, we'd argue that right now the valuation is pricing in an iPhone cycle that really would need to far surpass what we saw in the 5G cycle. And so when we went back and looked at the 5G iPhone cycle, we noted that there was just a confluence of factors that really pushed that forward. There's COVID, there was massive fiscal stimulus across the globe. In China, Huawei was handicapped by the sanctions in that particular market. And so we really like Apple's positioning relative to trust and privacy, and their reputation with the consumers unparalleled. So there's opportunity there, but it's hard to really to capitalize a catalyst for an upgrade to new hardware and also price in a subscription service in the same breath. So we think the market's already there. There's tons of appreciation for Apple's position. Your prior guest made a great point in terms of Apple's capital intensity relative to the other big tech. So those things are all clear advantages. We just think the market's already there. We look at price to earnings, and it looks like, on our math, that Apple's trading at roughly a 10-turn advantage to the broader market, and more expensive even than kind of at the dawn of the iPhone. So there's enormous expectations and embedded in today's valuation.
Ladies and gentlemen, brace yourselves for a seismic shockwave in the stock market world. What if we told you that Warren Buffett, the Oracle of Omaha himself, made a move so unanticipated that it's shaking investors to their core? That's right, Buffett, through Berkshire Hathaway, has dumped 55.8% of his Apple stock in the first half of 2024. This drastic reduction in holdings has left traders scrambling for explanations, creating a frenzy within investment circles. Apple, a titan in tech innovation and an enduring favorite of Buffett, now puzzles even the savviest investors with this recent turn of events. Could this be a harbinger of stormy times ahead, or merely a strategic maneuver in Buffett's ever-enigmatic playbook? Let's dive into the heart of this intrigue. But before we do that, if you want to keep up with Apple's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
And so with that in mind, I mean, what is expected to drive the mass adoption, that critical mass moment for AI and at people's fingertips? Because that's what our previous guest, Tony Wong, was quipping as well and asking, because that's what's really going to play into some of these companies eventually getting up to or growing into the valuations that they've already run ahead of.
Well, Brad, I think we think it's going to be sort of a fully functional and really compelling, a wow moment around Siri, the personal digital assistant, right? So it's been, 10 years, and really has Apple and others really have not been able to execute on that promise. So we would look to that. There's obviously challenges around the globe when you think about how are they going to implement this Apple Intelligence strategy in China? What are the terms and conditions that are going to be applied there? You've got in Europe, you've got the Digital Markets Act, which is going to make it difficult for Apple to really lean on its advantages when you think about vertical integration. But we think that a truly compelling, smart, helpful Siri that has personal context, knows things about you in terms of your contacts, your calendars, those types of things will be enormously helpful. But it's going to take a while to get there.
So, what's the deal? Is Warren Buffett losing his touch, or is there more to this headline-grabbing stock sale? The narrative surrounding this unexpected sell-off is richer than a slice of Apple's profits. It's crucial to decode the crux behind such a monumental decision and understand why Apple stock still remains a golden goose despite Buffett's retreat. Firstly, let's get one thing straight. Buffett's reduction in Apple holdings by over half is not trivial. Berkshire Hathaway stands as an investment beacon, guiding countless portfolios with its high-margin, deeply analyzed stock picks. What adds salt to the stock market, though, is how this move contrasts sharply with Buffett's previous unadulterated praise for Apple. He's likened Apple to an even better business than industry stalwarts like American Express and Coca-Cola. It's akin to praising your favorite coffee shop's brew only to switch to tea the next day. Deeply puzzling and raising a lot of eyebrows. The stark question here is, was this a calculated blowout or a canary in the coal mine? Back up your worrying thoughts with Apple's undying fundamentals and prospects reflecting otherwise. Let's narrow the lens to their recent financial records. Apple's Q3 fiscal 2024 performance was robust, reaching $85.8 billion, with earnings per share surging up by 11% to $1.40. If there's one lesson we've learned from stock market history, it's that numbers don't lie. And these numbers are anything but grim. Let's switch gears to one of the most electrifying drivers of Apple's growth, artificial intelligence. Apple's AI arm, encapsulated in the ambitious suite known as Apple Intelligence, is groundbreaking. From the more dexterous Siri capable of summarizing your bloated inbox to generating custom content, Apple's AI strengths bring tech dreams to reality. Given Apple's robust Q3 fiscal 2024 performance, and its groundbreaking advancements in AI, particularly through the Apple Intelligence Suite, how do you think these innovations will impact the company's future growth, especially with the upcoming iPhone 16 series and potential expansion into new markets? Let's break this down. Hello everyone and welcome back to Investocracy.
Clay, I want to bring up, or I guess more focus in on one of the points that you just brought up, and that's the regulatory risk, that side of things. You mentioned in your note that has largely been dismissed here by the street. What do you see as that real risk that should be priced in or could be priced in?
Well, I think clearly the most proximate risk is the Google risk, right? So Google pays Apple upwards of $25 billion a year in terms of its rev share on mobile search, right? They're the default mobile search on iOS. And so we've seen that in district court. They've deemed that construct illegal. Apple, of course, Google, of course, will challenge that and appeal that. But that, to us, that's the biggest risk. But there's regulatory risk across the globe. If you think about what's happening with App Store policies, not only in the U.S. but particularly in Europe, and that could slowly kind of chip away at what is really a powerful operating profit stream for Apple. Very high margin business. We've seen the services business really grow and add gross margin profit over the years, and so that's the real risk, is that the Google relationship is deemed illegal and ultimately goes away.
Clay Griffin, MoffettNathanson analyst, thanks so much for taking the time here. I see the Lawrence Taylor shout out in the background there with the throwback from UNC. It's going to make a couple of New York Giants viewing fans very happy. Thanks so much.
Thank you. My pleasure.
The upcoming iPhone 16 series, armed with these AI capabilities, promises to turbocharge sales with an anticipated solid upgrade cycle. Here's a fun fact. Even amidst the regulatory blues and cooling sales in China, Apple's inventive brilliance continues to pave its way. It's like watching a marathon runner maintain pace despite running on rugged terrain. Industry analysts predict that these AI integrations will not just adhere to existing customer bases, but entice newer markets, making Apple a torchbearer in AI consumer tech. Adding more feathers to Apple's cap are record-shattering services revenues. This sector saw an all-time high, contributing significantly to the overall financial pie. And let's not forget Apple's diversified product lineup, from the svelte new MacBook Air to the cutting-edge iPad Pro, powered by Apple Silicon. What does this translate to? Unrivaled performance and fortified positions in the competitive tech arena. Now, stepping back to Buffett's chess move, if Apple's ongoing strength presents itself like a Benelong orthogonal bull, why dump such a colossal chunk? Is this a seismic indication of Buffett's fading faith in Apple? Mr. Market seems to think not. A deeper analysis reveals Buffett's broader investment strategies, which may cloak this move as part of larger portfolio recalibrations or preparations for tax adjustments. Yes, tax implications could very well play a role here. Buffett himself hinted that selling some Apple shares could shield Berkshire shareholders from potential hikes in capital gains taxes. Furthermore, while Apple's challenges in China and regulatory landscapes are legitimate concerns, let's not flag the ship of distress just yet. Apple's resilience is exemplified through efforts to expand AI capabilities and elevate product features to overcome these headwinds. The diversified revenue streams and solid performance across sectors like services and wearables offer added fiscal cushions amidst regional sales wobbles. So what does all of this mean for Apple stock investors? And is it a good buy at the moment? The answer is easy. But before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Why this newfound optimism here?
Sure. So what we've picked up over the last few days is through the supply chain, we've learned that July was a bit better than we expected when it comes to iPhone demand. We do think that is concentrated primarily in the iPhone 15, so not necessarily a full read-through to the next cycle, but this is typically a period of time where you get a bit of a demand pause ahead of the next iPhone cycle. What we're actually seeing is relative strength in the iPhone 15. Again, builds around 54 million units in the September quarter. That is a record by about 4 million units compared to any other September quarter prior. Just to put that in context, that would imply roughly 55 million iPhone shipments in the September quarter. We're currently forecasting about 52.5 million. Consensus is about 50 million. So it's a relatively good data point that we're picking up on late cycle strength here.
So, what's the final verdict? Despite Buffett's eyebrow-raising decision to substantially cut his Apple holdings, investing in Apple remains a compelling, long-term play. The enduring allure of Apple lies in its unwavering commitment to innovation, particularly in AI and its strong financial backbone. Seizing on its current valuation, it's wise to monitor Apple's forthcoming AI-driven product launches, especially the hyped iPhone 16 series. Expanding services like Apple TV Plus and Apple Pay contribute intensively to diversified revenues, further driving growth. Currently, amid market oscillations, Apple's fundamental strength makes it a solid contender in long-term investment portfolios. Don't let Buffett's significant yet potentially strategic sell-off cloud your judgment. Remember, investment strategies aren't one-size-fits-all. What aligns with Berkshire Hathaway's institutional strategy might differ from individual investor needs. Apple's strong cash flow and commendable balance sheet set the stage for sustained innovation and growth. With this analysis laid bare, we invite investor opinions. What's your take on Buffett's unexpected move? Do you see Apple's AI advancements and diversification as a beacon for future growth, or do you remain cautious, echoing some of Buffett's potentially prudent concerns? Share your thoughts and strategies with us. Stay updated, stay invested, and keep the conversation alive. Now, go on. Make your portfolio pop with some Apple charm. And finally, if you would like to know what companies like Apple have been up to these past few days, go ahead and click on the next video on your screen. See you there.